Hey, welcome everyone. This is the New Haven Bitcoin meetup. It's been a few months since we last got together. It was actually January 3rd for the anniversary of the Bitcoin Genesis block. And things were a little slow the last 5 months or so with the bear market. But we got everybody together here and we somehow tracked down Tone Vase. I didn't think it was ever going to happen. I still didn't believe it until I saw him pull up. And but yeah, we have Tone here. I did a little presentation, gave some basic, Bitcoin 101, caught everybody up on the news since we last had an event. And now we're here with Tone Vase. So Tone Vase, he's going to do his trading Bitcoin live stream, and I'll let you take the floor now.
All right, thanks, Will. Let me move the camera over here. And it focused. Excellent. Hey everyone, thank you for coming out to the New Haven meetup. Yeah, it wasn't that bad of a drive from New York, and the drive home should be even faster. First time in, well, I don't come to Connecticut that often, but yeah, it's pretty cool. So it'll be good. So how many of you in the room are traders? Trade crypto? All right, so we got about half the room. Okay. But everyone cares about the price of Bitcoin in one way or another. All right, good. Because I could do like a presentation. It's like why Bitcoin's important or why the ICOs are in a bubble. But I'm just going to talk about the price of Bitcoin real quick, my outlooks, and then the floor will be yours for some Q&A. And if there are any questions, if you want me to take a look at some of the other altcoins, some of the stock market or currency markets. I know there's one currency trader in the room. I'm more than happy to take a look at the technical picture, and we go from there. All right, let me go ahead and jump on screen share for the video audience, and we'll do that. All right. Okay. So, wait, one more question. How many of you, how many of you have never seen any of my YouTube videos on my YouTube channel? Okay. Oh, excellent. So you guys have not seen my videos. Okay. How many of you have been watching me for less than 3 months? Less than 6 months? Less than a year? And over 2 years. Oh, wow. Okay. Gotcha. Going back to before I had my own YouTube channel then. Good job. All right. So you know how to find me now. Tonebase.com is the new website. Migrating, decommissioning Liberty Life Trail altogether. Not sure if I'll be able to change my YouTube name. Actually, I'm not even sure that works. But anyway, I got to decommission that. Got to rebrand here a little bit. And the closest workshop to this area where I teach charting is going to be in Boston on August 4th. That's going to be an interesting drive as well. All right, let's jump right into the charts. How many of you watched my video with Doug Polk the other night?
That was last night, right?
That was last night. Yeah. Last night's video with Doug Polk. Yeah, that was a good video. It I really could have went hard on him. I really could have, because when we were talking about some of the ICO he's invested in, if I start poking that bear, it could have gotten really out of hand. But let's talk about charting. How many of you have an understanding of charting, technical analysis? Okay, how many of you are learning technical analysis? Okay, excellent. So chart patterns are really important to me. And on a weekly chart, you have this massive triangle. It's hard for me to even find something similar on a weekly chart other than maybe this area down here. And or this area over here actually was a nice triangle in the opposite direction. However, back here, you can certainly draw a big triangle. And even though we broke out for a minute, we then broke down. I'm sure all of you have seen a bunch of my videos. I'm trying to say something I haven't said yet because I'm in person, but there's not much. We have fallen quite a bit. When you fall, clearly we got rejected by this 30-week moving average. And this 30-week moving average is going to start to fall really, really hard, right? You can even like do a very simple math analysis. Like the current value of this 30-week moving average is at 9,828. And next week, as of Sunday, you're gonna add whatever the opening price is on Sunday night, and you're gonna into the average, and you're gonna take away the second highest price of Bitcoin on a weekly close we ever had. And you can see how replacing this value by this value in the vicinity of 6,000 is going to drop it. The following week, you're going to replace the $19,000 close with a $6,000 close. Now you are averaging that number out with 30 other numbers, but this 30-week moving average is going to drop really, really hard. And that's going to be bad once the 30-week moving average crosses below the 50-week moving average. The last time that happened to Bitcoin was over here. That's the last time they crossed. And you can see how many weeks did it take to cross from the top, right? Like, so the high came in on November 25th. The moving average crossover came on August 25th. So that's exactly 9 months. So it took it would have been December. Right, so 9 months. It took 9 months for the moving averages to cross. Now in our case, when did we top? We topped on December 11th. So 9 months from December 11th would be September 11th, right? And September 11th is pretty far away. That's all the way out here. And so you can tell that the price of Bitcoin has been falling a lot faster because these moving averages are going to cross way before September 11th, which would have been the time equivalent to these moving average crossings back in 2014. So there's two things here, right? And I was going back and forth with Van Zen on Twitter a little bit today, and I probably should do another video with him. I'm getting together with him in Thailand again, but that's not going to happen till next year. So maybe we will do a video at some point, because I think that the faster fall in price is a bit of a good thing because it'll allow us to find a bottom earlier. He disagrees. He feels that the time it takes for a bear market is pretty much the same. Therefore, if we're falling faster in the beginning of the bear market, it only means there's going to be extra pain at the end of the bear market. We're not going to bottom any earlier by falling faster earlier. So we will see who's right. I want to be right. Like it's amazing how people think I'm pessimistic, but I'm surrounded by people I trust who are more pessimistic than I am. So this creates a bit of a dilemma. And if I was as pessimistic as them, then maybe I certainly should have sold all my Bitcoin somewhere near the top. But I still think that 5,000 has a chance to bounce the price significantly. Now, is that significant bounce going to be permanent? We don't know. I'm going to say probably not, but we need to see that bounce. It's impossible to project anything until we have a bounce. Another thing I commonly talk about is the way markets bottom. And I refer to two types of ways markets bottom. So markets bottom sharply. You can see the week of February 5th was where the price of Bitcoin fell below 6,000, but by the time the week ended, the price of Bitcoin was above 8,000. So it literally moved up 2,000 on, 25%. So the price of Bitcoin moved even 33%, right? From 6,000 closing at above 8,000. The price of Bitcoin moved to the upside off the low 33% in half a week, in less than a week, right? That's a sharp V-shaped bounce, okay? We had that in the S&P 500 as well. If you remember, when the market bottom, I believe it was March 9th, 2009. March 9, 2009, the S&P 500 hit $666 points. And it bounced very, very quickly. I actually do have the chart of the S&P 500, so I can pull that up. This is the weekly chart of the S&P 500. I will have to go to 2008. Let me see if I can just do that. Okay, so this is 2008. It bottomed in 2009 right there. Okay, so there it is, right? So this is the weekly chart. On a weekly chart, so this is a week's worth of data. It bottomed at what price? Looks like 666, I was right. And what day was that? That was the week of the 2nd. So it might have bottomed on it could have bottomed on the 9th. And you can see, I mean, it's nice that it bottomed on a 9, those of you that are familiar with the sequential. So that helps you time the trade. But you can see how you have this V-shaped bottom where you only had like one day and really a couple of hours to get the low. And then it went up and it never even came close. It had a little bit of a dip, but it literally went straight up. And over the next like 3 months, the market was already at 950. So the market moved 50% in 3 months. Imagine a 50% rise in the stock market in 3 months, right? That's a V-shaped bottom. And a lot of people didn't believe this bottom. There was a little bit of a scare in 2010, again, nice to see a 9 getting the high. A bigger scare in 2011. I remember that when Europe was about to collapse. But it kind of went up and up and up and up and up ever since. And that's one way markets bounce, where you get this V-shaped bounce that nobody believes in, and then it just goes up and up and up and up and up, okay? So that's one fate for Bitcoin. The other way of how markets bounce is the way markets bottom, is the way gold bottom. And I think a monthly chart on gold is probably better to look at. Each one of these candles represents 1 month of time. And if I go to the bottom in gold in 2000, and I zoom this out, you can see how this was the 1980 high, right, at 800. And then gold kept going down, and here is the area. Here is the area between 1998, when gold was 290, and 2003, when gold was looks like just over 300, right? But so if we only look at the late 90s, gold was stuck in the 200s for years. Right here, it's still in the 200s, right? So gold got stuck at the low for so long that nobody cared about gold anymore, right? So this was a bottom in time, and the S&P was a bottom in price. Now, we got the worst of both worlds in Bitcoin back in 2015. So in 2015, the bottom, we had this sharp crash right here, where the price of Bitcoin in 1 week fell from 265 down to 150. So almost a 50% correction in 1 week. And then it rebounded all the way back to 266 area. And it even actually went as high as over 300. So Bitcoin went 100% to the upside in a week and a half. But then we got stuck for 9 months in the $200 area. Now, Bitcoin moves a lot faster than gold, so I'm not surprised. We got the worst of both worlds. We got the ultimate crash, but there was no follow through to the upside, and then we got stuck at the lows. Is it possible to have both of those things repeat again? Yes. Is that likely? Probably not. I think that Bitcoin will have more of a V shape this time around. And I still think that would come around October, November. That's my outlook right now. So somewhere in October, November, we're going to hit a final low. And I don't think we're going to get stuck at the lows this time. I think we're going to get a final low. We're going to get a big purge. I think some exchanges might go bust. I think some exchanges will be exposed. Some VCs will be exposed. I'm waiting for some big buyers to kind of rage quit because they wouldn't be able to, hold through it, because a lot of big hedge funds and big investors bought a big amount of Bitcoin, right? And we'll see how long they're willing to hold. Maybe they'll be the ones that will cause that final crash by getting out and selling. So I don't know what will cause that. We're still curious what's going to happen with Bitfinex and Tether. I think that's a time bomb waiting to happen. So we'll see what happens there. But I am expecting a bottom. Now, if I talk about the sequential system, which are these numbers above and below the candles, everybody can see this okay? Can we maybe shut the lights? I'm gonna leave a bunch of time for QA. I'm just gonna go through this real quick, probably in the next 10, 15 minutes. Yeah, this is much better. And so I'm looking for a short-term bottom sometime in the next 2 weeks, right? So next week is the first week of July, and the following week is the second week of July. So I am expecting one of my nines. I still think that there will be, like, somebody's going to panic and it will drop. Again, my friend Ben Zen thinks that exchanges are supporting the $6,000 level because they may not be able to pay out their short positions. I'm a little skeptical on that claim, but he trades on those exchanges. I don't. I'm just a little skeptical as to why exchanges would have that issue because their job is to just match orders. So that's what I'm looking for from the weekly chart. The daily chart has not been very interesting because it hasn't been reacting very well to support resistance nor the sequential indicator. So I have not really been using it all that much. I am paying attention to this 128-day moving average. It has been very, very relevant. And it does have these, bigger shape patterns. But I've been looking a lot at the 12-hour chart. To be honest with you, yesterday, I did expect Bitcoin to already start going down into the $5,700 area. It seems to be holding up a little bit, which puts this area a little bit out of reach. We may, go slowly into this area of 6,000. But remember, the longer we hang around the $6,000 area, and the closer we hang around to the $6,000 area, the more likely it is to break down. And the longer your floor, unless it's very, very long, right? Like if we hang around the $6,000 area for, let's say, 3 months, that's enough time for people to get so sick of Bitcoin to stop looking at it. And that should be enough momentum to drive it to the upside. Markets bottom when the last panicky seller has sold. they don't bottom because some smart guy is coming in with a bunch of money to spend, right? I mean, look what happened back in February. Back in February, sure, a bunch of smart buyers came in and bought, and now they're not looking all that smart. So markets don't bottom on smart buying. Markets bottom when these guys that bought a bunch of this get lucky because this was the last panicky seller. Clearly, there was way more stuff left to sell, and everyone that bought here is not lucky anymore, right? When you catch one of these swings, you are more lucky than good. Now, as a trader, you can take on a low risk, high reward trade. Like when you see something like this and you expected 6,000 to be some kind of a support level, you got to jump on this trade. But somewhere in this area, somewhere below this low right here is basically when I got enough confidence saying that, hey, these lows are probably not going to hold. So this is where this smart buyer needs to realize when the secondary low was not the secondary low anymore, when markets are supposed to make higher highs and higher lows. That's how you step ladder up. The moment this low got taken out, these buyers all through here have to recognize the fact that they may no longer be in control and that the bull market that they thought had started has failed. So this is a chance for a trader to get out with a good profit and try to buy again later. And that later probably has to be lower than their initial buy. Because if these guys hold out for too long, they can try and defend it again. They can try and defend it again, but they've already lost. So anyone that bought here, and very few people were able to buy it in the 6,000s. The majority were buying on this green body candle, and the opening of that candle is 6,500 and the close is 7,800. So the majority were buying in the $7,000 range. All of these guys, if they're still holding, they're in losing positions. And if those positions were leveraged, they're going to start to get forcibly liquidated. So this is where you got to watch out for all those people to panic. Can the market reverse and go up from here? Of course it can, right? There's also fundamentals involved. People are learning more and more about Bitcoin. Europe is once again having its currency issues. So there's definitely reasons, but the technical picture is not good. The longer we hang around in the $6,300 area, the more likely we are to break out. The longer we hang around in the $6,000 area, the more likely we are to break down. Right now, I would not take on any trades. I would wait. I would wait for the price of Bitcoin to go below 6,100, or I would wait for the price of Bitcoin to go above 6,300. Above 6,300 can take you, it can take you higher well, because if 6,300 gets broken again, I don't think this is going to be a rejection. I think if 6,300 gets broken, we're probably on pace back to 7,000. So that's a good probability trade from 6,300 to 7,000. However, if we don't get above 6,300, your trade will be to the downside. Taking a look at the 4 hour, the 4 hour had a very weird candle right here. Clearly, someone with a lot of buying power wanted to defend the $6,000 area. Just as it dipped under 6,000, somebody really wanted to defend this area. And let's see how strong they are. I don't think this is going to hold. I don't think we're going to go above 6,300 again. I do think we're going to come back down to whatever this line is. I don't even know what it's there for. What is this line? Oh, I think that's the low. I think that's the February. Is it? That's a Fibonacci line. Why? From where? Yeah, that I'm not sure what that line is, but it seems to be having a good purpose now. I think once we get back to this line, that it pretty much covers this low and this low. And once we get back to this line, I don't think they'll be able to defend it again. So I am looking for a breakdown very, very soon. The hourly chart is not very useful. And the 30-day chart, the 30-minute chart is what I kind of used to do some mock trading in my last workshop. And it's not telling me much either, but it is a little bullish. We're consolidating near the top, which is bullish. That's about it. Bearish gold, and the way the S&P opened and closed today, this is bad. That is not the kind of candle you want to see. If tomorrow we start going down, I would wait 2 more days, and there's probably some more downside in the S&P 500. I'll have to take a look on Friday. That's going to be a make or break day. All right, floor is yours, guys. If you want, let's go with, do you have any questions on charting or trading or price-wise? Let's do those first, and then I'll go to the front of the room and do more conceptual questions that don't require a monitor. Yes?
Why do you say that 5,000 is the support?
Sure. Oh, you know what? I'm gonna pull up one of the slides from my presentation. Let me stop screen share for a minute, because it's an easiest way for me to show you. So I'll pull up a slide from my trading workshop where I explain this. Okay, here we go. All right, oh wait, let's do, let me do screen share again. So this is one of the slides in my trading workshop, where I talk about how prior highs are very good points of support. So that was a high. It's hard to predict a brand new high. It's very difficult to predict where the high is going to be. But if you have an older high, it can serve as a very good support. Okay, and I do have other slides in. I mean, this is on the way down, right? You always see me do these horizontal lines. We drop and then we go back to the prior low. They're not always perfect, but they happen. And here's Bitcoin. And here it is on the way down, right? So again, this is one of the slides that I use. And here is the early bubble of 2013. When Bitcoin went up on the Cyprus crisis. And in 1 week, the price of Bitcoin went from 266 all the way down to about 55 bucks. I remember this well, right? So the price of Bitcoin literally fell 80% in 1 week. 1 week, right? That was a bubble. In 1 week, 80% drop. And that was the low off of this drop. And that's why when people kept saying how come the fall of 2014 isn't like this, I said, well, because we didn't drop 80% in a week. If the price of Bitcoin fell from $20,000 down to $4,000 in a week, that's 80%, right? That's divided by 5, yeah. That would have been equivalent. But we didn't drop down to $4,000 in a week. or even, I would have given it a month, but that didn't happen, okay? So we weren't in this type of bubble. So it was hard for me to judge where the true high was. So the high was either 266 or the high was closer to, what is that area? Like maybe 200 or something. So 266 or like 180, right? So I kind of drew two horizontal lines and I drew them as a box. So I was using this area as support, okay? And when the price dropped, I expected it to at least drop to 266, but I did not, discount the fact that we could drop all the way to the more closing basis, weekly closes around 180, and we fell just below that zone. Now, what happened on the way up? You can see how on the way up, this was an area of the prior high. When we broke it and we started to fall, this was beautiful support. And look how it bounced right off of that. It did it again. When we made a high at around 1200, we fell and touched this line perfectly. When we went up again, it didn't really take much time to go up further. So all we had to do was come down to this area, and we did. But we missed a couple of points after that. So here is the big one that we missed. When we broke out and went to 3,000, we left this red circle completely open. And it's a possibility that the circle will close. Now, just like I put a blue box between the high and the candle close, between 180 and 260, I put a box between the high back in 2013, and I kind of raised it a little bit to cover this high. This is 1350. This was the ETF high that you were mentioning earlier, well, right? The ETF high was right here. The ETF rejection was 1350. The Mt. Gox high on Mt. Gox was $1,242. Not on this chart. This is Bitstamp. On Bitstamp, the high was 1163, but the candle close was around 900 and change. So this entire orange area is technically still in play. How long is this area going to be still in play? In my opinion, until we go like above $25,000, this area is in play. Okay? There was another gap that never closed in a similar way. The bubble of 2011 went all the way to $30, maybe even $32. Then it crashed to $2, a 98% correction. The next time we broke $32 was this run up. When we broke $10 in January of 2013, we went straight up to 260. The crash only took us to 55. So we left a gap between $32 and $55. Now, when did I consider that gap to be ignored? Well, pretty much when we got to over $1,000, right? Like we have to go substantially higher than the prior high. Because until we broke 266 in November of 2013, the $32 correction was still in play. Correction back to 32 was still in play. Now, I wasn't doing any content back then, right? I didn't start doing content until mid-2014. So you guys would not have heard me say that, but that's what I would have said. Same logic applies. The only way I will ignore this orange box, at best the top of the box, at worst the bottom of the box, the way the box fully got hit in 2015, covering that high. I will only ignore this box when we're breaking out of this high with momentum going higher. Then this box is going to be ignored. Okay, there is a chance for that, right? So let's move on. So this is an open gap. Then we went to 3,000. We only went down to 1,800. If only we touched 1,350, I would not care about this anymore. But we didn't. We missed it. When we broke to 5,000, and we didn't hit 5,000, hit about 4,975. We then fell to exactly 3,000. Again, old high became support. Then once we broke 4,975, we first went to 7,600, pulled back and missed this area. And then we went all the way to 20, pulled back and missed this area again. Now we just made a lower low down here at 57. I'm expecting this orange line to be touched because it was the prior high, exactly the way we touched it here. Okay. Now, if we break this line, here's the problem. If we break below 4,975, if we don't swiftly, you see how fast we rebounded off of this? How fast we rebounded off of this? How fast we rebounded off of this? That's what we need again. If that doesn't happen and we get stuck at 5,000, we're going lower. And because 3,000 has already been perfect support, very unlikely that it'll do it again. And then 1,300 is back on the table. Okay, which is why if we bounce off of 5,000, it needs to be swift or get stuck at 5,000 the rest of the year into November. Like get to 5,000 now as soon as possible and just get stuck there. Like no volatility. Bitcoin is between 4,700 and 5,300 for about 6 to 9 months. That will create sufficient hate of Bitcoin to set it up for greatness. So long-winded answer, but I haven't talked about this stuff in a while.
Thank you.
I'll try to keep the rest of the answers shorter. That explain a lot? All right. Any other questions charting related? All right, let's go here then there.
Great explanation. I'm just wondering where you see like adoption go. How does that coincide with charting? What if Amazon accepts Bitcoin, things like that? It's just gonna throw it all off.
Yeah. So if Amazon announced that they are accepting Bitcoin for goods, that could severely drop the price of Bitcoin. I'm going the other way here, right? Because if Amazon announces that they're accepting Bitcoin as a payment, what are the chances that Amazon is going to hold on to the Bitcoin? Very little, right? So all of us with Bitcoin will now start using it, and Amazon is going to immediately sell it, creating selling pressure, dropping the price. Now, what you want to hear Amazon say is that, you know what, let me, camera's on me. Let's, anyone here doesn't want to be on camera? No one cares? You'll be kind of far away. I'm going to put it here, and I'm going to jump to the front of the room. So the question was centered on adoption. I'm going to grab my mic as well. And I'm going to move to the front of the room and stick to more conceptual questions. There we go. Assuming I'm still on camera. All right. And this way the mic's closer to you guys as well. So, so what you want to hear Amazon say is, we think Bitcoin is great, and we are offering our employees the option to take their salaries in Bitcoin. Amazon has a lot of outsourcing to foreign countries, which is how they end up with Amazon points. And then this is how you get to use Purse.io, by the way, right? There's a lot of people in India that earn Amazon credits, and then they have to use them somehow. So they're willing to take a hit. So if Amazon doesn't just accept Bitcoin through some intermediary like Coinbase or PayPal, if Amazon actually is gonna use Bitcoin to create the circular economy and pay some of their foreign employees, some of their foreign consultants, all of their employees, give them, you know, an option to take Bitcoin as, you know, currency, as payment. But it's hard for them, right? Like Bitcoin fluctuates in value too much. So that would be great. That would go a long way for adoption, because it'll help a little bit. But right now, I think there'll certainly be a short term. It's all over the news. Everyone's gonna buy Bitcoin, but then they're gonna realize that, hey, I get to spend this stuff more, right? Again, anyone here read the Bitcoin Standard by Saifedean? Two people. Started?
Kind of scroll through it.
Scroll through it. All right. I had the audiobook on my drive to and from Montreal, listened to the whole thing. It's absolutely great. Where he talked about how important it is for Bitcoin to be more of a store of value than a transactional currency. Also, if Amazon was to accept Bitcoin right now, that would be problematic, because like too many transactions, right? Now, granted, I think adoption of Bitcoin is very slow right now. You can tell by the empty mempool. It'll be great news. It'll be great news at first. It'll definitely spike the price, maybe even double the price of Bitcoin over a month, but then it'll slowly bleed away because people, everyone has Bitcoin and they're just using it, it gets sold. It just gets sold in the open market. You need new people. Like, what is the incentive of an average person to go and buy Bitcoin just to buy from Amazon? It doesn't really make sense. They would be catering to us. They would be catering to people with Bitcoin, and we would be tempted to go and use it without realizing that by using Bitcoin on Amazon, it's like selling it on the open market, dropping the price, right? So it'll be a good news bump, but as far as the underlying use case, that drops the price. Now, what you want to hear is, you know, some central bank or some banking operation in some country, small country, but that's known productive, like a Hong Kong or a Singapore, right? Like they're fairly financially savvy, very high end on technology. I love going to Singapore. You have one card with an NFC field in your wallet. You can use anywhere in the country, like public transportation, restaurants, anywhere you go. Just you put cash on it at any 7-Eleven, which is on every corner in Hong Kong, if anyone's been there. And anywhere you go, you never have to take cash out. You can just like put your wallet right on the NFC field, pay for anything. I mean, they're pretty high end. Their public transportation is great. So what you want to hear is a country like Hong Kong saying, in order for us to compete for the next 50 years in the global financial space, we as a country have decided to slowly put Bitcoin in cold storage. That is going to be massive, because that is going to scare other countries into doing the same. And that would show people that, hey, you know, some governments are taking, you know, the financial future of the country seriously, and they're starting to put some money in the store of value. And them buying it will drive up the price, right? Like Amazon entering the space is going to be a seller of Bitcoin. Some banking operation is going to be a buyer of Bitcoin, taking it off the market. That's going to drive up the price of Bitcoin. That's what you're looking for. I always said that Netflix has an amazing use case. I mean, Netflix charges credit cards. I guess so does Amazon, right? So the good thing is, like what Amazon needs to do is that they, or Netflix especially, is to enter markets like Africa by displaying a QR code on a TV screen and allowing people where credit card fraud is rampant, allowing those countries to watch Netflix by using Bitcoin. And those people will be incentivized to go buy Bitcoin to use it, because otherwise they don't get the service, right? So if Amazon, it's a weird dynamic, right? Like Amazon opening up for Bitcoin sales in the US will drop the price after the news spike. But Amazon accepting Bitcoin in Africa will raise the price because they need to accept Bitcoin payments where they don't accept fiat payments, not where they do, because that forces the population of that region to go and buy the Bitcoin to then spend it. So then at least it's even, like the buying counteracts the selling.
Or countries without banks, you know, these people that-
Correct. Yes, yes. And I love that slogan, like Bitcoin is for the unbanked, Bitcoin will bank people. And here in the first world, I always make fun of that. You know, I think in America, Bitcoin has been a lot more responsible for the banked becoming unbanked by using Bitcoin, more so that Bitcoin has banked the unbanked, because everyone keeps losing their bank accounts by being affiliated with Bitcoin. It certainly does a good job of that. All right, you had a question.
I had a question. If you see the technical bottom and some other tier is call it at 5,000 or 5,800, depending the range, what is like the risk-reward balance there, given that the upside, at least what we've seen in the past, is substantially higher? Why would people wait for these bottoms and not accumulate at present? What is your opinion?
Well, it depends on your time horizon, right? Like there's a reason why I haven't sold, because my time horizon is long. So are you a trader or are you an investor? So an investor is someone that is willing to hold their position for years, even decades, right? Like this is what bothers me when people say, I'm an ICO investor, I'm investing in an ICO. Oh, really? You're going to hold on to it for 5 to 10 years? Because that's what a pre-IPO investor does, right? I mean, that's what the Facebook investors did. They got in early 2000s before Facebook, as Facebook was launching and they were becoming popular, and they didn't get out till the IPO in like what, 2010, 2011, whenever the hell they IPO'd, right? A lot of them waited for the IPO. So they were in Facebook for 10 years. That's an investor, okay? These pre-ICO investors, they're in it for like 3 months until, they can resell that thing for a higher price. That's not an investor. That's a speculator. That's a trader, right? So if you are planning to hold Bitcoin for the long term, yeah, you should just dollar cost average. You shouldn't try to time that stuff. If you're a trader, however, it's your job to time. That's what a trader does. So as a trader, you wait for that dip, and if not, you trade the breakout, and you can make up for those losses with leverage on high probability trades. But as an investor, you should never use leverage at all, because even if you catch the $5,000 low and you only go in 2x leverage, you just lost all your money if it goes down to 2,500, which is very possible, okay? But if your time horizon is 5 to 10 years and you buy at 5,000, you can hold through 2,500 if you're in it with no leverage, and you can just buy more. So you gotta think about what kind of, are you an investor or are you a trader? So that's my best explanation for that.
All right, so we actually have a super chat. Somebody was wondering, what is the correlation between mempool size and the price of BTC?
I don't think there is a correlation between mempool size and the price of BTC. So mempool size, for those new to the world of Bitcoin, a mempool size is basically the amount of transactions that are kind of stuck there. Now, there isn't a direct correlation, but I remember either at the end of last year or going into this year, when the spam finally stopped, because once SegWit adoption broke the 30% barrier, spam had stopped because it was way too expensive to spam Bitcoin. And when the spam stopped, I saw how empty the mempool was. And that just told me how grossly overvalued it is. And people made fun of me for saying that. I said, if the mempool is empty, no one is using Bitcoin. If no one is using Bitcoin, why the hell is it worth $15,000?
Spamming with fake transactions.
Well, you're spamming with real transactions, but they're like 1 Satoshi each. They're not actually paying for anything. They're just filling it up to make it more inconvenient for Bitcoin users, while they're trying to push their, scam coin and fork war, explain why their coin is better, right? Now that's about to happen to Bcash on their 32 megabyte block. So I'm gonna really enjoy watching that. But
Can you elaborate on that?
sure. Well, I'm actually setting up a whole 1 hour YouTube stream with the people that are going to do that. So their intention is over the next 2 to 3 months to fill the Bcash blocks, like maximize them, like get these heavy transactions. And by heavy transactions, I mean the cost of your transaction is 1 Satoshi per byte of space in that transaction. So for example, if you sent me 1 Bitcoin, just you send me 1 Bitcoin, for me to move that Bitcoin out is very cheap because it's just 1 transaction from you to me, and it's I don't know how many bytes that transaction is, but it would be tiny, few bytes. And I'm paying 1 Satoshi per byte. Now, if 1,000 people sent me 1/1000th of a Bitcoin, and now I still have 1 Bitcoin, but it came from 1,000 different people, that transaction is very heavy. That could be, hundreds of that could be over 100 kilobytes, right? Now the block size is only 1 meg. That transaction could be so heavy that transaction alone could take up 10% of whichever miner is going to mine it. And if a miner is going to take up 10% of the block with your 1 transaction to move that 1 Bitcoin to somewhere else, he's going to charge you a huge fee. You're going to have to pay 10% of the fee that he would if he did a bunch of small transactions instead, okay? That's what was happening to Roger Ver and some of the other people that thought that, hey, Bitcoin is always free and always cheap, because he was running, an online store where people are buying very, very cheap things with Bitcoin, and then he has to move all that out, and his transactions were very data heavy. And no miner wants to process that without a fee. And you're filling up the block. Imagine 1 transaction taking up 10% of the block, or even 3% of the block. Too much. So that transaction is very expensive in Satoshis per byte, because that transaction is a lot of bytes. So that's what I think they're planning to do to Bcash. They're planning to purposely create these massively heavy transactions and then send a lot of them into the network. And the other thing they want to do is, because the blocks are 32 megs, and if the block is actually full at 32 megs, remember, when a miner mines a 1 megabyte block, he says, I found it. Here you go, and he sends it out to the world. And the world has to validate this, right? If no one validates that block, he could have lied. And then what happens? Everyone is building on top of a fake block. So at least a few other miners have to validate that block. That takes time. So your block, you a miner, you found a block, you send it to everybody else around the world. So it takes time for that block to get to the entire world and their mining rigs. Then it takes time for those other miners to check that your answer to the math problem is valid. Now, right now, that takes maybe a second, maybe less than a second, right? Right now it does. But when your block is 32 megabytes and not 1 megabyte, that takes significantly longer. And what happens? The miner that found the block, he knows he found the block. He doesn't have to wait for the other people. He immediately starts mining the following block. And if he has a 5-second advantage, that is significant in the world of mining. So now what happens? It's not really a miner, it's a pool of miners. So if a pool of miners has an advantage on the following block, this is how you get miner centralization. Everybody wants to be in the pool that can find the most blocks. So this is how your network starts to get totally centralized, because everybody wants to be on that pool because they want that advantage on the next block. And this is kind of what they want to show as well, that you can centralize mining and even break some of these nodes because they're so data heavy. Ethereum is having to deal with similar issues already because their blockchain is growing too fast. Anyway, I don't know how I got to that part. What was the original question?
Yeah, you explained about the stress test.
Before that, or it was the mempool size, right? So the mempool size, I don't think it has a huge correlation on price. The question that he should have asked was, does hashing power follow price, or does price follow hashing power? That's the big question. Now the price has crashed, but the hashing rate continues to skyrocket. So there has to be some kind of a delay, right? Because your mining operation, like a gold mining operation, it's not real time. Your investments are 6 months ahead. You're buying, you bought all of this hash power, you bought new equipment, and that equipment has to arrive. And once it arrives, you're going to put it online because it's the latest equipment. So there's a huge delay. If the price gets stuck at the $6,000 area for a long time, you should see the hash power slowly come down, because the less efficient miners will not buy new hardware because they won't have the money. They'll just exhaust their current hardware. However, some miners will always buy the more efficient hardware because they have to. If you don't buy the more efficient hardware, you won't be able to compete. So the bigger operations will stay in there. So I think hashing power follows price, but on a major delay. A lot of people think it's the other way around. I believe hashing power follows price, but you're looking at least a 6-month delay, maybe even 9-month delay. We're coming up on 6 months from the high. So let's see if the hashing power starts to cool off in starting July, but it'll probably start September because the price didn't really fall until 3 months in. So probably around September is when a lot of the mining operations will see their difference, and that's when they might hold off on buying new equipment right now if the price is low. So, or maybe by end of year. Yeah, is there a question back?
I thought I read somewhere, is the cost to mine estimated average around 5,000 also?
Yeah, but that average is, I've talked about this on my podcast. No one really knows. No one knows the cost of mining, right? If you, and no one is, not many people are actually incentivized to do this independent analysis. And the mining operation are sure as hell don't want to tell you their actual cost of the operation, right? Like if I ran a giant mining farm and it cost me, $2,000 to mine a Bitcoin, I will be telling the world that it cost me $5,000 to mine a Bitcoin because I want everyone thinking that the price of Bitcoin will not fall below $5,000, keeping the price higher, right? Like it's to their advantage to lie and tell you that it's higher than it is.
Yeah, no, I get that. I'm just talking for a ballpark.
Right.
You have
That's
no idea what the equipment costs you.
right. Well, here's the thing. The average, even if the average is 5,000, the range is gigantic. The range between countries, like the cost of mining in Venezuela is tiny. The problem there is you can get killed or arrested for mining, right? Like the cost of mining in Venezuela is not financial. It's social, right? Paraguay is I believe is the same way. Again, another country you may want, walk around with military security if you're going to run a mining farm, but your cost of mining there is cheap. There was an article recently where somebody said they're mining Bitcoin in Canada for like $2,500 Canadian per Bitcoin, right? So you can get cheap electricity in places. Probably Vietnam and Mongolia are very, very cheap. So there are operations.
Oh, yeah, no.
Right.
No. And I guess what Iceland is the big one also, right? Because you the geothermal energy.
Yeah, but
they just open up the.
you would think so, but for some reason it's not. I know.
I thought I read somewhere that that's what they were talking about, kind of as a ballpark.
Yeah. So that is
coincided with that 5,000 you were talking about.
That is a ballpark overall, but a lot of it also depends on these mining operations and how are they capitalized, right? Like if they are a really big company and they have like a letter of credit, like they can have a giant loan. Like they can have a $10 million loan, like you get like on buildings and stuff, right? So they have plenty of time to wait for the price to bounce back up. And if they default on the loan, they default on the loan. They probably have some assets. It's really hard to judge. I think that Bitcoin can certainly fall below the price of production, just like metals do fairly often, and even oil does. I mean, oil fell to $25 a barrel last year.
That was probably a very good analogy, because way below the cost of a lot of these drillers. But
Yes.
You said they had a lot of money outstanding, so which they had to service the debt. So if they were operating at a loss, they
Right. If it stayed
operating just to pay their debt.
Right. If oil stayed down there for very long, a lot of these mining operations would have shut down, and they would have started back up eventually. And also, like from a cost benefits analysis, if you're going to shut down your gold mine, you got a big problem. You have employees. What are you going to do? You're going to fire your employees? You're going to then hire, like they're going to keep trying to go. They're going to borrow money. They're going to keep going, because shutting down probably means forever. Like you're not going to be able to shut it down and then open it back up, right? You got to pay the server bills. You got to pay the electricity bill, even though the electricity is going to drop. But like if the price of Bitcoin falls even 20 or 30% below the cost of production, if you stop mining altogether, it might cost you more. It just might cost you more, because then for X amount of time, you're going to have almost the same bills, other than the electricity bill, and you do have other bills. But now you have no income coming in.
Equipment gets underappreciated.
Right.
Underappreciated is the sunk cost it becomes. You don't want to have a sunk cost, so you want to keep going as long as possible. Right.
So what's most likely going to happen is this is the time for these operations to invest more money in efficiency. Like, hey, the price of Bitcoin is going near to my cost of production. How do I lower my electricity bill? Let me go and negotiate that part. How do I create a cheaper cooling system for my miners? Let me go hire an engineer, thermodynamics engineer, and let me cut some cost on cooling. Again, like if you're mining out in the jungle because you have cheap electricity, you got to cool the stuff. That, like in Venezuela, your bigger expense could be cooling the equipment versus electricity.
Driving the turbines.
Right.
Yeah, that's the largest thing.
Right. But hey, if you're gonna go into Africa and try to do solar mining or something, your biggest expense might not be the electricity. Your biggest expense might be cooling, and that you gotta figure out a solution to that. So we don't know, but it can certainly drop below, and it can swing, John. That's the thing, right? Like it's one thing when the price, like a price for staying for 3 months, 20% below the cost of production is a lot worse than a drop to 50% below the cost of production for a week or two. And that's what that's how most markets bottom. and it will be back up above the cost of production within the same month. Yeah.
What is your opinion on the futures market as related to Bitcoin? How much does that affect the price?
I don't think it affects the price at all at the moment. I think the future volume is very, very small. The leverage on the futures is very high. And they're not physically settled. So, like, there's no threat of delivery. Like, the futures aren't used in price discovery because the futures are actually using some underlying exchanges to get their price. So, and it makes no sense for, let's say, a financial institution to buy a bunch of futures and then go and sell a bunch of Bitcoin because the leverage is only like 3 or 4 to 1. Like, you're better off doing it on BitMax with 100 to 1, right? So I just don't see the futures market being all that effective in price discovery, almost like the S&P 500 futures don't affect the price of the S&P 500. Because the S&P 500 is calculated through 500 stocks that are trading every second during the day. And the futures market just sits on top of it and people gamble. Like, the volume on there is huge, but betting a lot in the futures market doesn't do anything about putting that money going into the underlying company. It's just two guys gambling back and forth. So I don't see it. I know I had this debate with Ugly Old Goat, which is another really good trader. That's the name he goes by. I know his real name, but one day maybe he'll tell people. But like he thinks it's the other way around, but like that's my view on it. In that, like, they're completely unaffected. It's like even if you and I were billionaires and we're betting on the price of oil, we have well, actually, it's a little bit different. Right, if you and I are betting with each other on the price of oil, we have nothing to do with the underlying price of oil. Like, it's unaffected. That's kind of what the futures are in Bitcoin and S&P 500, but not in oil. In oil, by me betting $1 billion against you in the oil market, you can actually demand for me to bring you all of that oil, right? And I need, in order for me to place a bet that big, I need to have the ability to source that oil, and you need to have the ability to hold that oil. That's why 90% of all futures contracts on oil and gold, they cancel each other out because the exchanges know which of their clients have the capability of delivering the oil and which of their clients have the capability of receiving the oil. Because I don't. Like if I forget, if I end up in a car accident and I don't close my contract, what happens when 1,000 barrels of oil show up in my New York City apartment? Right? Like, it doesn't work that way, right? Like I am able to trade real barrels of oil, but the futures exchange knows that I am not registered to receive delivery, nor am I registered to actually bring oil to somebody else. Therefore, they will cancel my contract a week before the delivery is due. Like a week before the contract matures, they will cancel all of those contracts of the people that don't have the capability of delivery. Now, the thing is, because the market doesn't know who can and can't deliver, these speculations can spike the price. But in the S&P, because there's no delivery, you can't. And the same thing with Bitcoin. So I don't think it has almost any effect at all. I know the market hit its high just as the futures launched. And that's a speculative effect, not a real effect, in that people were so hyped that Wall Street is getting involved. They kept buying up Bitcoin. And now Wall Street is in, nothing has changed, and we're going down. How are we doing on time?
9:04.
All right. Maybe one or two more questions?
Yes, there's been a couple announcements about various like state-run projects, like in Venezuela, there's the Petro coin. There's a theoretical coin that might be started by the U.S. government. I don't know if there's any validity to that, but it's just a rumor. And there is a project in Ecuador that I know about, and they actually block people from buying cryptocurrencies because they want people to use this state-run digital currency.
Yeah.
But in broadly speaking, what is your opinion about those kind of projects, and if they ever really take off, how would that affect?
All right, so state coins, sure. So that would be great for Bitcoin. So all these state-sponsored coins, whether it's the petro that they say is backed by oil, or whether it's the Fed coin that will be backed by the faith and credit of the US government, all these things are, in the case of the US or Europe, it is simply a move to eliminate cash. The Fed already has a Fed coin. It's called the US dollar. 95% of all US dollars are already digital. So going to a Fed coin is, if they're smart, they just eliminate the 5% cash and they go 100% digital. Now they will rename it and in order to make it sound different, but it's not going to be decentralized, right? It's not going to be proof of work. The petro is not proof of work. The petro is just a digital representation of the Venezuelan bolivar. And it's simply the elimination of cash, so they can monitor every single payment. And the elimination of cash is great for Bitcoin because Bitcoin is decentralized. So don't think of it as a cryptocurrency. Think of it as the same currency you have now, only without a paper alternative. And that's going to send so much money into Bitcoin because it will be the cash alternative that they used to have.
In coin market cap, if you see a big drop or big spike up, why does all the coins go up together and you see them all come down together?
That's a good question. I mean, a lot of these coins just have, they're almost like a very high beta to Bitcoin. Basically, that really is a good question. Bitcoin does like raise all boats and lower all boats. Look, I would say that in general, this might not be, I mean, I might get a lot of criticism for this answer, but when Bitcoin goes up, people become more wealthy. And when people become more wealthy, they speculate on stuff, right? The more wealthy you are, the more often you're going to go to a casino, right? To have some fun, right? The more wealthy you are, the more you're going to spend money on random things. So as Bitcoin goes up, the more money people have. Like, I'm noticing that less people are attending my seminars, my workshops, now that the price of Bitcoin is down big, even though the price of my workshop is still 0.1 Bitcoin, like it was at the high. Because remember, if you're a person that has 10 Bitcoin and Bitcoin is $20,000, you have $200,000. So spending 0.1 of that, so spending $2,000 out of $200,000 on something is not a big deal because you still have $198,000 remaining. When the price of Bitcoin is $5,000, your 10 Bitcoin is only 50 grand. And even though the same workshop is now only $500, you still only have $49,500 and not $198,000, right? So you can think of it that way, as when the price of Bitcoin goes up, people are more looking to gamble because they feel richer. And obviously, you're not going to gamble when the price of Bitcoin goes up. What you're going to do is you're going to buy altcoins. You're not going to gamble by shorting altcoins, even though you can only short a handful of them, right? You're also not going to sell the altcoins that you have for more Bitcoin when the price of Bitcoin is going up, because you're already richer from the Bitcoin that you already have. So there's no reason for you to make more money by selling those altcoins. So the price of altcoins goes up. When the price of Bitcoin starts to fall, it's the other way around. the price of Bitcoin starts to fall, you don't have as much money. And when a person doesn't have as much money, he sells things to when he needs more money, right? This is why gold crashed 33% during the 2008 financial crisis. And that's when I learned that being a gold bug waiting for a global catastrophe of biblical proportions is a really dumb thing to want. Because when the 2008 crisis comes and you're sitting on a bunch of gold, but you just lost your job along with everybody else because all the banks have failed and your small business can't get a loan, and your house, all of a sudden you can't meet your mortgage, what do you have to do? You go and sell the gold, you go and sell whatever you can, right? So more people sold that. That's why gold crashed with the stock market, because when the stock market crashes, people lose their jobs, people have no money. All those stories, oh, people are selling their gold teeth because, yeah, well, if gold is worth money and they don't have any money because they're broke, because the economy sucks, they're not buying gold, they're selling gold to pay for food. So it's the same concept here. So when the price of Bitcoin starts to fall and you're sitting on a bunch of altcoins, you need to liquidate probably your shittiest position first, because you need more money, because now you don't have as much money. That's my best explanation for why these smaller stuff goes up faster and goes down faster.
What is it going to take for the SEC to approve a Bitcoin ETF?
Ooh, that's a good question. I think it's going to happen sooner or later. I think it needs a little more stability and a little more value on chain, right? I think they will wait until it goes back to new all-time highs, right? Because the SEC cannot possibly put themselves in a position where like the price of Bitcoin crashes completely. The SEC also needs to figure out what is and isn't a security. Now, they already said that Bitcoin isn't a security, but they don't want to open up the floodgates of other coins trying to become ETFs using the fact that they're not securities, right? Like they've said Bitcoin is not a security. So the SEC doesn't want to open up the floodgates of people requesting every other ETF under the sun when they get the Bitcoin ETF going. They're also waiting for more. They're not going to approve the Winklevoss ETF. Let's stop there. Like that's not going to happen, right? It's like if the Winklevoss were going to try to do a futures, a futures contract. No, that went to the CME and the CBOE. Professional futures exchanges. CME way more professional than CBOE. Now, ProShares is an ETF company. They have been trying to do an ETF as well. So what the Winklevoss might be able to pull off is be the custodians of the underlying Bitcoin, assuming they are, their exchange has not been hacked yet. So they could be the custodians of the ProShares ETF. The other issue is going to be, how do you determine the price of Bitcoin? See, for gold, the gold ETF, its price is somewhat based on the futures of gold, which are price discovery. The futures on the CME of Bitcoin are not price discovery. So now you got to once again default to the underlying exchanges, which are not all that professional, right? So there's a lot of stuff going on there. The security of the underlying Bitcoin is the big question, because right now with gold, you can secure gold. It's not that hard. It's a lot harder to secure Bitcoin. What happens when the Bitcoin in the underlying ETF gets stolen? So that's another huge question, right? So the SEC has to make sure that there are enough provisions on the security of the Bitcoin, which still a lot of question marks there. So I think it'll take a while, and the volatility as well. I don't see them approving the ETF until maybe the next halving of 2020 and the price of Bitcoin is above $20,000. I just don't see it. And yeah, I just don't see it. I think it would be irresponsible of them to do so. Now, having said that, I think it's already irresponsible for them to have GBTC out there, and therefore GBTC needs competition. So if anything gets, like if I was petitioning for a Bitcoin ETF, my argument would be GBTC has a monopoly and GBTC is horrible because it swings up to 300% above the underlying value, right? So my argument would be you currently have a trade, you have allowed Bitcoin to be openly traded on exchanges, and it needs competition that can do a better job. So if anything, I can see additional trusts similar to Barry Silbert's, but that's my only argument as to why I have like 10 arguments against the ETF and one argument for, and that one argument for is substantial. The fact that GBTC can't be the only monopoly on the market, and it's not equipped for this purpose because of the way it's made.
While we're on securities, real quick, see a future with like securities exchanges like T0 and those type of exchanges?
Not really. I don't see it. I don't see T0 doing much. I mean, it's possible that T0 will come up with some kind of better database to reroute orders. And if they do, someone, and this is going to be interesting, right? So T0, I believe they've ICO'd, right?
Yeah.
Right, and this is a problem, right? When you ICO, you have a useless utility token that has a speculative market value. Therefore, if T0 comes up with some kind of revolutionary database, there is only two options. One, they get bought by the NASDAQ that will integrate that database, but they're not going to integrate the token, right? And what do? So my guess is if T0 actually revolutionizes something in security rerouting, whichever engineers were responsible for that, NASDAQ or the New York Stock Exchange or the DTCC, the clearinghouse, they'll just hire those engineers. They will pay them the money and they will rebuild it without the damn token.
But what would go on it? You know, with tokens, everything but Bitcoin, everything will be on it.
No, tokens would not be on it at all, right? I mean, T0 wants to change the way, stock ownership is provided to people, but that's a centralized mechanism. That decentralizing that would be stupid. No, never. There's no way the government would allow the stock market ownership to be decentralized. First of all, they would not know who owns the stock, and second, you can't trust it. What happens when your decentralized database goes down, like EOS? Like, you can't do that, right? Like, Bitcoin is just a store of value in the medium of exchange. It's not ownership of a physical thing, and your stock is kind of like a physical thing.
Well, unless they tokenize, like they're doing their tokenizing hotels in New York, Shark Tank. Have you heard of that? Tokenizing.
I know, but and I think that's ridiculous. You can't tokenize a physical property. You can only tokenize it for, transfer of ownership purposes, but like they're doing it in order to fund their company. So like you tokenize stuff all the time. Your airline miles are tokenized, your casino chips are tokenized, but they're pegged to the value of the dollar. The airline miles are pegged to the value of the dollar. Like, it varies because the price of your airline ticket varies every minute, right? but your airline miles are pegged either to the mile or to the dollar. They're not freely floated currencies. The idea of freely floated application tokens is Amazon charging Amazon stock for Amazon products. It just doesn't make any sense. The world wants to use one form of money. The world would love to use one form of money. It's very convenient. But it's just that no one can trust one form of money. Maybe Bitcoin will change that, right? But yeah, tokenizing ownership like real estate makes no sense because there's always going to be, people involved physically. Like someone has to validate that it's your land. Someone has to allow you to have that land. Having it, and it's also dangerous. Imagine putting your real estate on let's say Tezos or EOS, and then the whole thing just disappears. Like now what? Like you need another copy. No, there's none, right? Like look, Bitcoin can disappear tomorrow, but nothing happens other than people go broke, right? Like they're not like I don't have any medical records anymore. Like what happens then, right? Like this is why these things are crazy. It's like yeah, so Ethereum just went down. So this plane can't actually land. It doesn't know where it's going, right? Like you can't have that. Like so you can't decentralize this stuff, right?
$1 million contract just wiped out, right? Yeah.
Right. Like I mean, do you want to get into a self-driving car on the Ethereum network or one driven by Uber and Tesla, right? Like where are you going to put your life, right? Like I know a lot of people hate like YouTube and Google, but if you use GPS for driving, if you use Google Maps for driving, you're kind of trusting them with your life, right? Otherwise, go get a paper map. Same thing with self-driving cars, right? You're going to trust Google to do it. You're not going to trust some DAO contract to drive you around in a self-driving car at 90 miles an hour.
You're talking about the DTCC. They actually are working with Axion and R3 for permission blockchains, and apparently they're supposed to be able to save 20 to 30% on what they pay, and it amounts to like billions per year in savings. Yeah, no, and then that's great, and they might be able to provide better ownership. But but I'm assuming they have very like their engineers, their database guys should at some one point or another say, why is there like a freely traded why is there a token here that 12-year-olds trade that's somehow instrumental to us moving our own data, right? Like at some point, someone has to ask that question in a boardroom, right?
They say money. It's all about money.
Right, no, but at some point in a boardroom, someone is going to say, if we're internally moving a piece of data, why do we need a token that 12-year-olds speculate on? Like someone has to raise that question.
It's internal, like you said. They do
Right.
it on their end.
Right, like the Ripple token makes no sense. And it's hilarious now. So the Ripple people are now trying to create this environment saying the Ripple token is completely independent and has nothing to do in association with Ripple, the company. That's what they're saying now. It's really amazing. So Ripple has about 28 products, and one of them involves the Ripple token. And if they could, they wouldn't even involve that product, because that token is totally useless and a complete scam.
They tricked everyone into funding.
Well, they tricked themselves. Like they didn't know. Well, like they didn't know. So yeah, of course. Well, the Ripple token was so cheap. Like that's the worst part. I don't think they made any money to help fund their company with that Ripple token because it was virtually free at first. But now it's a nightmare for them because now people believe in this token and it's a security. And I don't think they got much for it because it was so cheap at first. It was like about fractions of a penny. I mean, there are 100 billion of them, right? So even fractions of a penny is, $1 billion or so. And they had that. So even fractions of a penny, but again, they locked it up. So they're kind of using it now. They're selling it, right? Now they have a lot of money. But no, they're going to be, look, if they have enough money to bribe the government, they'll be okay for a while. I mean, they're advisors to the IMF now. Yeah, they're on the list. I saw the list of IMF advisors. It was either people blockchain advisors for the IMF. It was either people I've never heard of before in my life, or people that I consider scammers. That's the list of IMF advisors of blockchain. It's really bad, really bad. But there's only one Andreas Antonopoulos, so he can only officially advise so many, large government entities. Yeah, right. How are we doing on time?
9:25.
9:25. All right, you guys want to call it and grab a drink?
Sure. Yeah. Let's do
All right. Hope the live stream worked well. No one was complaining about audio or video.
I didn't see any complaints.
Oh yeah, so were you guys able to see me when I was sitting here? Oh yeah, perfect.
There's no trolling in the box?
Oh, no, there was talk.
Just how much, right?
Someone thought you were on security guard.
Yeah.